Hello, everyone. Welcome back to the Trailline Podcast. I'm your host, Richard Moglen. Joining us today is a very special guest, David Ryan. David is an extremely experienced investor and trader and was profiled in Jack Schwager's Market Wizards, along with his mentor, William O'Neill. He also won the U.S. Investing Championship for 3 straight years in 1985, 86, and 87, with triple-digit returns each year. David, thank you so much for taking the time to speak with me today, and welcome. It's truly an honor.
Okay. Thank you for having me on.
My pleasure. So to start things off, I always think it's really interesting to hear about people's backgrounds and how you first got interested in the stock market and maybe even purchase your first share of a stock. So yeah, could you tell us a little bit about your journey and where it all began?
Okay. Well, it actually really began around the dinner table. And this is, this dates me, but back in the probably mid to late 60s, my dad would come home. He developed real estate, and we would sit around the dinner table and he would say, "Oh, I just bought a new stock for you guys for your college education." And he said, "Oh, I bought you some shares in this new concept in food or fast food." And he said, "I bought you some Kentucky Fried Chicken." And so that was one of the first fast food stocks. Or he would say, I came home and I bought some Disney for you. And at that
Right.
time, all there was Disneyland. There was no Disney World. And The Wonderful World of Disney, which would be on at, I think, 7 o'clock on Sunday night. So we would watch that as kids all the time. So things like that. He was actually very good in selecting themes. He was extremely early on cable television stocks. I mean, people don't even talk about cable anymore. And he just reads and he thinks of these themes that he actually gets aboard, and he has some nice runs. So that's where it first started. But he would bring home the evening newspaper. That's where you'd only get quotes at the time. And I remember going through and I was looking through the different quotes, and I found a stock trading at $1. And I asked my dad, I said, "Look, if I go into my room, open my drawer, get $1 out of my drawer, can we buy, a share in the stock?" Said it doesn't work that way. You got to do some research. We got to find some companies that are doing well. And a few nights later, he came home with the Wall Street Journal. There was an article on a company called Ward's Foods. They made, and you can probably still find these out there, Bit-O-Honey and Chunky candy bars. And so I thought, at that time, I was in my early teens, going to junior high school. And I bought 10 shares of Ward's Foods at 10, I think at 10 and a quarter. I still have the confirm on my wall that I bought it. And I still remember standing out in front of the student store where kids were lining up to get snacks at lunchtime. And I'd said, "You got to buy these 2 candy bars." It never worked out. The stock went from 12 or to 10 down to 2. But I became fascinated of why my stock went down, and I saw other stocks that kept on going up. So, this is very strange for someone who was in junior high and then high school, getting trial subscriptions to actually Daily Graphs, which is the precursor to MarketSmith. Right. And then also Value Line. I haven't seen a Value Line in a long time, but I know Value Line. I would get trials to that, and just fascinated. So that's where it all started. And then I actually worked. Then I graduated UCLA, and I had a friend who was on the floor of the PCoast, or the Pacific Coast Stock Exchange. He got me a job as a runner, and that was literally. It was actually shaped like a circle, and there would be specialists making markets and stocks. They would do a transaction piece of paper. I'd take the piece of paper and I'd walk it to someone who would teletype it in, and that would go across the board. I thought I was going to be, after a few months, picked up by one of these specialists and be an assistant and learn how to trade through them. And that never happened. And so I started, I was only there for about 3 months, but then I started thinking, why don't I get a job at the company that I already get products from? And I was getting Daily Graphs. And so I walked right up the front stairs of William O'Neill and Company and went to the receptionist and said, is there anybody I can talk to about a part-time job, an internship, anything? I'll work for free. All I want to do is learn from this guy, William O'Neill, who I've heard has done extremely well. So I actually talked to his assistant for about a half an hour right after that.
Hmm.
And then I had an interview with Bill the very next day.
Wow.
And I don't even remember what I hopefully I was wearing a jacket and a tie, but no one had ever tested, or coached me on how to go through an interview. But it turned out that I liked some of the stocks that they were recommending. So he offered me a part-time job. I did that for a few months, and then it worked into a full-time job, and I ended up staying for 17 years. So that's kind of the short, quick story of how I got started.
That's awesome. And going back to the candy company being your first company that you owned, that's kind of almost the genesis of your idea that you want to look around the world around you to find ideas, find companies. I know you've said that in previous interviews, and often it's the products that we use ourselves that are going to go out and be those true market leaders.
Yeah, and I think people make the market so complicated. It really comes down to two things. One, what are you doing with your life?
Hmm.
What are you buying? Where are you eating out? Where's your restaurants? What car do you drive? What phone do you use? What are your friends talking about? And then just matching up those concepts
Right.
with some rules.
Right.
Is the stock in an uptrend? Does it have good earnings? You combine those two things, and then they also have some sell rules, and you should be able to find some very, very good stocks. Because just think of it, you're going to be trying to find the best product at the best price, or the best service at the best price. And millions of other people are probably very similar to you, and they'll be doing the same thing. So you're going to be finding some great names. And as long as the tax structure is rewards innovation and entrepreneurship, these companies are just going to keep on coming.
Right. And you've called it the treasure hunt. That's the name of your chapter in Market Wizards, the
Yeah,
treasure hunt.
yeah. I mean, the whole thing, it's a game. It's like, well, what's going to be the next concept, the next company that's going to do really, really well? And that's to me, that's why it's fun, it's ongoing, and it's just a lot of fun.
100%. And going back to your very early days at William O'Neill and Company, tell us about kind of how you built a relationship with Bill O'Neill. What kind of mentor was he? Was he strict with you? Tell me a little bit about those interpersonal relationships and yeah, how you basically learned from him and developed your style.
Okay, well, it wasn't as you might think it would be, where I came in and then he would just sit down with me every day.
Yeah.
No, I mean, I was just a peon. I was working in the institutional department, which was a
Right.
great experience because I was around probably 15 men who had been, men and women who had been in the markets and talking to large institutions, Fidelity,
Right.
all these different mutual funds and banks, and and I got to ask them questions, and some of them were good in the market. A lot of them were okay, but most of the time I was filing, I was making charts on sales projections or how well everybody's doing and things like that. It wasn't until I actually won a U.S. investing championships that I actually started getting attention from William O'Neill, and was actually able to go in. They would have a Monday morning sales meeting where they
Hmm.
would go over their ideas, his ideas for the week, and what he wanted to do, and things like that. And as a, if I would say of, I mean, that was a good thing, but it was actually a little bit of a fault in terms of hiring people with O'Neill, because he would place so much emphasis on how well you could pick stocks that sometimes he would look past other things. So
Right.
that's that was a good thing that I did well in the market. But um, so yeah, so that's then eventually I started giving him ideas for their institutional product recommendations, and then started working more closely with them as I started doing that. And then I guess I'm not sure if it was in 87 or 86. I think it was in 87, where he actually gave me some of the company's money to invest, and would be rewarded if I made money in that account. So I was, I guess, the first PM or portfolio manager within the company, and I guess they went on to have a lot more after I left or so.
Absolutely. And going back to how you learned, obviously you learned from the other people in institutional sales. But were there any books that you read, any other top traders that really influenced you and helped you along your path?
Yeah, so much of it was, I don't want to say it was self-taught, but the institutional salesmen, they didn't, I mean, they just kind of gave me an idea of what was going on out there.
Right.
But and then O'Neill hadn't written the book yet. I mean,
Hmm.
that book was not for at least another 3 or 4 years. I still have a copy of like
The original.
the the original, which was just a pieces of paper with a binding on it and had no cover or no, things like that. And and he rarely gave, every once in a while he would kind of give an in-house kind of canned slim type of talk.
Right.
um, so it really was, it was, I guess I learned from, they had books of their recommendations. It's called New Stock Market Ideas, and I would go through and I would start looking at, see where they would make the recommendation, and then where it was taken out. And so I would learn that from that. But my biggest learning experience was from studying my own mistakes,
Right.
because in 1982 I had an account that was at 30,000. I think I had $30,000, and then the market exploded in August of 82, and I had a great move, and I doubled the account.
Hmm.
Well, it was just, I was just part of a huge bull market. It wasn't really all my skill, and I really didn't know what I was doing. And so I was already at the company for a year, and then we got into a horrible market, or it just, growth stopped working. Nothing was working. I started getting chopped up completely, and that account went from 60,000 down to $16,000. So I mean, that's pretty much blowing up. I finally sat down one weekend and I went through every single stock I bought for the prior year and found out what I was doing wrong. And I just found out that there was a pattern that just kept on showing up over and over and over again. It was, I was
Hmm.
buying extended stocks. So when I stopped doing that, I finally said, okay, I'm only gonna buy exactly at the buy point, exactly where the stock was coming out into new highs or above the majority of the base.
Right.
I'm going to look for the right characteristics. And from that point on, I mean, I think very shortly after that, I got my first great winner, and it was a stock called, it was actually called Ward's, which is very similar to Ward's Foods, but Ward's Incorporated, which was an electronic retailer, which then changed its name to Circuit City.
There you go. Yeah.
And so had a great win out of that. And then just, I was so focused. I wasn't buying pullbacks. I wasn't buying extended stocks. I was buying exactly right. I didn't care what the rest of the market looked like. Um, and so I was buying one setup and one setup only. And that's where I just started hitting one after another after another.
Focusing on one specific setup and just trying to
Right.
master that. Right.
Right. I mean, you try to do a number of different things. You try to you try to buy breakouts and pullbacks and all sorts of different things, or you start mixing styles. That's where you can get into trouble. And you just want to try to simplify the whole thing.
Absolutely. And how would you describe your own personal time frame? Like, would you classify yourself as a swing trader, position trader? And could you give kind of people a sense of your average gain, average loss, and kind of holding periods for both winners and losers?
Um, I haven't calculated it in a while, but when I buy a stock, I want to stay in that stock as long as I possibly can. I do not
Hmm.
like going in and out, in and out. You have to make so many decisions.
Hmm.
Whereas I find a good stock that has all the characteristics, I want to keep in this thing as long as it keeps on going. And if
Right.
If it's only 3 weeks, that's fine. If it's 6 months, if it's a year, that'll be even better, because I always found the stocks usually that I held the longest were the ones where I had my biggest gains on them. When I was and so well, so then in terms of time frames, I don't know exactly what my average holding period is. A lot of it depends on the market,
Right.
depends on what stocks are working in the market. Sometimes, technology can be very volatile, and so those are a little bit faster, but things like retailers that can be a little slower and steady, sometimes I can hold those a lot longer. So it all depends. I've always said that even if you have a number of losers in a year, if you keep those small, but you have 1, 2, 3 really nice gains, you should do extremely well
Right.
in the market. So,
Absolutely. And going back to your U.S. Investing Championship wins, um, how is it different competing in a championship versus your own personal trading? Are you taking up a different approach, or are you still doing the same thing that you would use today to trade your own account?
um, well, I think in something like that, you want to turn over a little bit faster and always keep the money moving. And I think when I was investing in those or in those competitions, I would be much more. I would have fewer positions. I would
Hmm.
probably have 3 or 4 positions, maybe 4 or 5 positions, and then every starting position would be at least 10%. And then if the stock started doing well, I would quickly get to a 20% position. And then if it had a really nice run, then I would sell that thing down once it looked like it was about to stall. So that was probably shorter term.
Right.
And I would be just constantly moving the money from one horse to the next horse to the next horse, and getting those gains. The interesting thing about that is that, though, after 3 years of doing it, I also entered a fourth year in a row, and there I was so focused on the results that I started getting away from what I had done well. I was more focused on the results and not enacting the strategy the way it should be,
Right.
and so I started. I would be taking too big of a position, and
Right.
so I would have too much in any one stock, and I wouldn't give it enough room. And so actually the fourth year I was flat. And then the fifth year I actually came in second. Um, so that's just sort of like the end of the story, other than the 3 times that I won, that yes, you can get so focused on the results that you don't do what you should be doing.
Right. And as somebody who's been doing this for decades, you can answer this question: how is it different today trading versus back in the '80s, back in the '90s?
Um, well, I think that the prices of stocks. I mean, I remember, well, most of the time before probably year 2000, is that there were very few stocks that ever traded over $100 a share. Now you've got all these stocks that are trading at ridiculous prices, and they're moving 20 points in a day or 50 points. It's just it's I wish they would split them so there would be it
Yeah.
just get it's still hard to get used to stocks making such big moves. Um, but uh, in terms of how it's really different, I am a big believer in, well, I mean, if you want to, let me step back 1 second.
Hmm.
We're talking about investment books and things like that. My biggest investment influence is actually, and this would be a shock because no one ever talks about this, is the Bible, God's
Hmm.
word. There is more investment advice in there than any book ever written, in terms of just controlling your emotions, fear and greed and discipline. And probably one thing that I base all my almost all my investment criteria on is a passage found in Ecclesiastes, and it's something that a lot of people have heard before. Ecclesiastes 1:9, it talks about there's nothing new under the sun. What was before has already, it will not, you think things are new, but it's already existed before.
Right.
And
Right.
so when you talk about, well, how were things back in the 80s, or when you in these investing championships, I'm buying the exact same stocks, the same characteristics now as I did then. And you can look back at charts from I was looking at a Bethlehem steel chart in 1915,
Yeah.
had all the exact same characteristics as a lot of these stocks do today. So there's really nothing new. It just repeats over and over again. And the only thing that's different is the name at the top of the chart, because they have very, very similar characteristics.
And those are the can slim characteristics,
Yes,
great
they have
earnings, sales. Yeah.
exactly. It's the things that as I find, everybody's looking for truth these days. What is true? Well, God's word to me is true, and it's been true for 2,000 years. And I say the same thing about what O'Neill laid down. I think what he's laid down and the characteristics he originally found is really the truth of how the market works.
Hmm.
So there's so many parallels between what he's discovered and what God laid down. Is that this is how stocks, they operate. If a company has great earnings or a great product, they're going to have great earnings. People are going to want to own that company,
Right.
and stock price is going to go up. I don't know how that's going to change, unless again, um, tax reasons clamps down on entrepreneurship, and we don't have any new products, and nothing new is made. Um, so anyway, I find truth in really, one, in terms of the market and how you should act, and how you should trade in the market, and then how you should believe and how you should live your life.
Right. Right. And going back a little bit to your time at O'Neill and being the chief market strategist, what are kind of a few key things that O'Neill would kind of repeat? What are some keys that he passed on to you about how to trade and how to manage your emotions and manage positions?
Um, I actually I spoke for a conference. I think it was the last. I don't know what they called it. The last investment seminar that
The
William
Master
O'Neill
Trader
and
Program?
Company,
Yeah.
yeah, that they
Yeah.
gave. That was a few years ago in Santa Monica. And actually, I wrote down all these things, and I had, and so if I could I'll just
Yeah. Go
quickly
for it.
just go through what I got. I mean, he's always said, he's always was an optimist. He's never forget that this is the greatest country in the world, and you have just so much opportunity. He would say that all the time.
Yeah.
He would always stay positive, and he would also stay humble.
Hmm.
Um, and even against unrealistic odds, against going against the Wall Street Journal, he promoted a newspaper, and was fairly successful with that newspaper, um, even up against incredible odds. And and then a few other things. He said, always know the direction of the economy. If there's underlying strength to the economy, that usually corresponds with a good market. Be flexible to change your market stance is something that he was a master at doing. When I just remember there would be bear markets that go on for months and months and months, and everybody's in a bad mood, or
Yeah.
no one can make any money. And all of a sudden he gets his follow through day, and he's in there buying stocks while everybody's just sitting around saying, well, it's such a bad market. I can't, what. And he's actually getting fully invested, and everybody else is sitting on their hands. So it's good to be flexible. Details are really important. That's something he stressed in the products that we put out at the company. And the same thing in reading a chart and looking at the characteristics of a stock. Um, the littlest detail can make a big difference between a stock being just an okay stock and something being a gigantic winner. Um, Another thing, you never need a manual to the most successful products ever introduced.
Hmm.
And he gave the example of the car. you know you either push the button now, or just turn the key and step on the gas, and off you go. You don't need a manual.
Right.
And that's the same way when I remember in the mid to late 90s, we started coming out with online products. And I
Hmm.
was one of the first ones to sit down with a programmer, and Bloomberg was out at the time, but we wanted to put everything online. And I just kept on telling the guy, we don't want to have anybody to know keystrokes or any backslash things that I think a Bloomberg terminal you need to work with. I said, maybe this is an insult, but I said, develop develop it for the village idiot. So
Hmm.
anybody can sit down, anybody without any technical know-how, and just be able to point and click.
Make it
And
intuitive. Yeah.
very easy. You don't need to read the manual and what's going on. Um, so then always do things the legal way, buy the book, never cut corners, because you, especially when you're working for a firm or you're in the business, there's also compliance that you have to go along with. You never
Yeah.
want to get into trouble with that stuff. Uh, Keep it simple. Bill only looked at weekly charts. He wouldn't look at daily charts. Not until I think I started showing him daily charts, but he would always concentrate on the weekly and wouldn't go back and forth. But the weekly actually just takes out a lot of noise
Hmm.
that's going on intraday and interweek in the market. And then always challenge the common wisdom of Wall Street. Um, and you know, there's just a lot of common fallacies in the market that people keep on repeating over and over again, and he would always challenge that. And then the last thing was work hard and remember what's important. Success comes through hard work. um, and but I add on to that is that don't work I mean work hard, but there are things that are more important than your performance in the market, because I've seen so many tragedies in the markets over 40 years. I've seen people commit suicide. I've seen people have families break up, marriages break up, because it becomes so important and so overriding.
Yeah.
It's not worth it. So keep a perspective of what's really, I go faith, family, and friends are the three things that are really important out there.
Absolutely, that's well put. And being in the industry for 40 years, I'm sure you've had your ups and downs and dealt with losses. How do you get out of a rut when you're not trading to the best of your ability and nothing seems to be going right? What kind of steps do you take to kind of try to turn things around and get back to your A game?
I just, if I've had a number of stocks, and let's say it's 3, 4, 5 stocks in a row that I'm buying and they're just not working out,
Yeah.
then I just immediately start slowing down.
Hmm.
I don't take as big of a positions in the stocks that I'm buying, smaller positions, and I just wait until things start working, and then I start increasing my positions. Because if things aren't working, either the market's getting tough and it's about to go into a downtrend or a choppy period,
Yeah.
um, or you're just not picking the right stocks. and
Right.
and and so why keep on forcing more money and taking bigger positions and saying, well, I got to make it back, I got to, it's really just taking it one stock at a time and try to get that one winner and then get another one and then start getting that confidence back and increasing the size of the positions.
Absolutely. And do you have any advice for mindset or risk management for younger traders out there who just got started in the past few years?
If they're just getting started, and they, even if you've had a few years of experience, I mean, just like I think about somebody who just started, um, since March of 2020, and all they've seen is mostly an up market with very few corrections. Um, that that type of market, and even the market, today, is, to me, is not, it comes along once every 20 years.
Hmm.
This happened in 2000, 1999 and 2000, and it's happened again in 2020 through 2021. there are, I mean, a lot of people don't know what a bear market is, and they just think it's just one stock after another, and we all jump aboard this one, and everybody's talking about this one. But it's there are going to be bad markets that come along, and if you really don't have that much experience and you've only been in for a few years, I would actually take a majority of your money and put it somewhere else where you can't trade with it, because sooner or later we're going to get into a bad market, and you're going to lose back probably a lot of what you've made, because you've had just the experience of it. Everything only goes up,
Yep.
and you don't really have to sell because you'll get bailed out eventually.
Right.
So it to me, it's not really, I mean, yeah, again, sooner or later it's going to happen. We just have an event of so much liquidity. I mean, the
Yeah.
amount of money that the Fed has pushed into the economy has found its way into the market, and until they start tapering or start raising interest rates, this is probably going to go on for a while, where we're going to have this rotation, one group 1 week and then the next group, and it just keeps on rotating around. So, but
And yeah.
I'd tell them to go slow, and also to, yeah, use a smaller portion of their money, learn from your mistakes. You'll learn more about yourself and your own trading by studying what you do right or wrong.
And diving into that a little bit, what kind of recommendations do you have for people who want to do post trade analysis? What's kind of your process? Do you pick the best five winners you had, worst five losers? How do you kind of go about it?
Yeah, you can. I mean, now these days everything's online. All your trading is online, and so you can go and see what have been your biggest gainers, biggest losers, and then go in and start studying those. And the other thing too is, it's good to do is to screenshot charts of the stocks that you're buying,
Right.
put them into a file, and then just go back, a month later, 6 months later, and just study where you went in, and why were you buying at that point. It's also good. I used to print the charts out because we
Hmm.
couldn't save them to anything, and you just print them out and write on them, and then just look at them and see, and then print out the chart after after the transaction's over, to see where you went right, or where you went wrong. But that will expose things about yourself that you probably didn't know.
Yeah.
It's actually very hard to study your mistakes too. A lot of people, they don't want to admit they've made mistakes. But if you can be humble enough to admit that you're wrong, study where you went wrong, and then correct that, then you'll do a lot better in the market. But it takes humility to be able to do that. Yeah.
And it's almost like athletes studying game film of the good and the bad games and trying to find their weaknesses and also what they're doing right as well.
Right, because yeah, I've had people who've written me or asked me. I said, "Oh, can I just sit right next to you and see what you're doing,
Right.
and or you can see what I'm doing, but I don't know the thoughts in your head. I don't know your mental makeup. I think there's a certain makeup of an individual who can be successful in the market. They have to be very disciplined. They also have to have a background of being able to take risks, be able to admit mistakes and take a loss. That's so important. I've always said, you got to, when you come into your trading office or room or wherever it is, you have to take your ego and throw it in the trash can, and just be able to admit, hey, I'm going to make a mistake, or I'm probably going to make a number of mistakes, and I just got to learn from them and move on.
Absolutely. And you've kind of already touched on this a few times, but how important is lifestyle when it comes to trading and investing? You've talked about how you don't want to be too active because then you have to make so many decisions. So yeah, how do you take that into account? How much time in front of the screens? And yeah, what are your thoughts on that?
Um, yeah, I almost think sometimes it's better not to be sitting in front of the screen the whole time,
Hmm.
and and actually get away, or just even turn, and maybe not turn it off, but go to another room and do your reading and do your research on individual companies, than sitting there and watching every little tick going up and down. I mean, I guess you have to do that if you're a day trader, if you're very, very short term, but But if you like to take positions and try to stay with them for a long period of time, then it's actually better not to look at the intraday swings,
Yeah.
because sometimes, these a 10-minute chart can get you could start going, oh my gosh, this thing's getting killed, where then you step back and you look at a weekly chart and you go, there's nothing wrong here.
Right. Right.
So you have to, I guess, decide on what time frame you want to be trading, and that will dictate how much time you're sitting in front of the screen.
Absolutely. And I've done a lot of interviews with some veteran traders like Mark Minervini. And one thing I always like to hear about is their weekend and also daily routines and how they go about like preparing for the next day to set themselves up for success. So would you mind kind of walking us through what you do on a weekend to analyze the market, find stocks to trade for the next week, and kind of yeah narrow your focus to only the best opportunities?
Well, I spend a lot of time, usually on a Sunday afternoon, Sunday evening, going through as many stocks as I possibly can.
Hmm.
Um, I look at I'm almost exclusively using MarketSmith charts, and I'm going through a bunch of screens. I go through, they've got a MarketSmith 250, which
Hmm.
is the best stocks based on earnings and relative strength. I go through all of those. I have my own, I call it my own monitor. I call it data monitor, after a product that O'Neill used to put out, where it's just a list of stocks that
Hmm.
I constantly add some to, and I take the ones that aren't performing well and I take those out. I go through those,
Hmm.
and then I'll go through maybe a few different other screens that I have set, and I'm just trying. Then I go through a lot of group charts. I like to look at the top 50. I like to see what's moving to the top 50 groups out of
Hmm.
297 they have. Um, and so I'm trying to see, is there a group theme that's coming on? Because lots of times when a stock makes a great move, it's along with the group. Um, so if I can, I actually try to get through as many hundreds and hundreds of stocks as I possibly can. Um, and that's one, I've always said it's one problem, and they're trying to correct it at MarketSmith, where most of the time you can only go through one stock at a time on your screen. Now on the iPads, you can go through about 4 at a time.
Yeah. Yeah.
And so that helps, because I used to go through when it was daily graphs. You would have a blue book, you would have a green book. One was New York, one was over the counter and American, and that was 2,000 stocks, and I could flip through those really quickly, and I can go through both books in a couple of hours.
Hmm.
Now it takes me twice as long to go through 600 or 700 stocks, but I think they're working on it, and so I think the technology will finally kept up. But that was a step back, when they eliminated the printed product and went only to this one.
So looking at all those stocks kind of give you a sense of what groups are setting up, where to focus your attention, and also on the overall market health as well, and the
Oh yeah,
breadth of the market.
I get the greatest feel for the market from looking at so many individual stocks, and are there new stocks that are breaking out or
Right.
setting up. Um, and the thing about this market is that it's been, uh, even as the market has been coming off, there's still stocks that are holding up or they're breaking out. Usually in the past, when we'd go into a correction, there wouldn't be anything to buy, and they
Yeah.
would all be rolling over. And so so this the rotation that keeps on going on, but you can find that by going through as many stocks as you possibly can to see these different trends.
And on Sunday, how many stocks do you have on your focus list for that next week? Kind of how many stocks are you narrowly kind of choosing between for potential buy opportunities going into the next week?
Well, I probably come up. I mean, I don't know. It looks like this week when I look at the list that I have.
There are a lot of
eh,
setups this week. Yeah.
yeah, I don't know. I probably had about 15 different stocks that looked pretty good, but I narrowed it down to a few stocks. But then I also have a number of alerts set on other stocks.
Yeah.
So when the market starts off, I start having all sorts of alerts going on. So it's not just the list that I went over this week, but some of the alerts I set on stocks from the prior weeks.
Right. Makes
So,
sense.
and
And
then,
yeah.
yeah, then during the week, every day I'm going through and I'm running, also running screens or just seeing what's acting well, what sectors are acting well, and just doing more research, looking at more stocks.
Awesome. And getting into your daily routine, can you kind of also walk me through a typical day, starting from the pre-market to when the bell rings? What time are you waiting until to potentially enter a position? And also, what are you doing after the market closes?
Yeah, one disadvantage, it's a good thing, it's a bad thing, about being on the West Coast, in that the market opens at 6:30.
Yeah.
And so, you have to get up, very, very early. Um, and now that I'm not managing money for other people, I don't have to get up as early, but I'm usually sitting down at around 6. So I got a half an hour to kind of catch up on the news and look at the stocks that I might be buying or adding to.
Hmm.
Um, and then, but the good thing on that is that the market closes at 1,
Yeah.
and I usually spend another hour or two, but then I've got the whole afternoon to do stuff. Um, if you have a family, actually thought this was good, because I would get off to work early before anybody woke up. And so we have 5 kids. Now they're all fully grown. And but I miss the chaos of the morning when
Hmm.
everybody's losing their lunch and they forget their homework and things like that. But I would be able to pick them up from school at 3 o'clock and things like that. So there is advantages on the other side to all that. But I would do more work after the market closes, looking for more other ideas, things I missed and such. But I would, yeah, go again, look through Market Smith 250 to see what might have broken out, what I missed and such. So I a lot of it on Sunday, and then additional stuff during the week.
And when that bell rings, and the stock pushes through a pivot that you're watching, are you waiting until half an hour after the bell, 45 minutes after the bell? Because often stuff can reverse very early on in the day. So I was wondering how you kind of handle that.
Yeah, I usually like to wait. I if I make more mistakes, where I make most of my mistakes is if I actually start trading too early, because it's amazing how some of these things, they gap up 2 points. They look like, oh my gosh, here we go, the thing's breaking out.
Yeah.
You buy it, and then a half an hour later, you're already down a couple points because it's just pulled right back in. Same thing on the downside. You think, oh my gosh, I got to kick this thing out because it just broke support. 45 minutes later, it starts marching on back. So I actually like to wait for the market to calm down. And
Hmm.
sometimes I miss something. Sometimes it breaks out and it gaps up and then it just keeps on going. But what you can do is just maybe even wait the first 10 minutes
Yeah.
and see if it makes a new high, and go with that. But I've seen so many stocks. I go, I they actually gap down. I go, what? Why did it gap down? I mean, not a huge gap, but the thing's down 3%, 2%. And I look around, I can't find any news. And then the thing starts marching on back. So you just got to go a little bit slower in those first 10, 15, 20 minutes, because there's just all sorts of strange things going on.
Absolutely. And now I think it'd be awesome to talk about kind of the current market conditions and also get into some leaders and stocks you're watching. Maybe you could go ahead and share your screen and bring up Market Smith, and maybe we can, to start things off, bring up a chart of the QQQ, another index that you're watching, and talk about how you're viewing the current market conditions.
Okay. Share. Okay, you're seeing it. Okay.
Yep.
Well, there's QQQs. Actually, I mean, it's actually coming back up to highs. But if you look at this, and if I can, let me get my line pan going, this actually hasn't been outperforming the S&P for since February of this year.
Hmm.
And so I'm thinking it's losing a little bit of steam. I mean, it's still nice. It's still back into an uptrend. But the other thing, it actually came down on some pretty big volume.
Right.
And now it's rallying on some pretty light volume. So it's just something to keep an eye on. And then the spiders, the S&P looks stronger. It's gone into new high ground because it's a little bit more diversified. And now you got oils and financials, which hadn't performed well. And so this is not so much concentrated as like the NASDAQ or the triple Qs are. And then the Russell, same thing. The thing's been, look at the relative strength
Yeah.
that this has been going against for the longest time. So it's still, mega caps. These are, Russell is smaller, but I would think this would start doing well because it does have a lot of financials in it. So it's been a really, I mean, I call it's a huge rotation market, moving from group to group to group. And at the beginning of the year, I was on IBD Live, and I think it was the first week of the year, and I was saying, hey, a lot of these technology stocks have had a huge move, and they're starting to get very, very volatile. And I said, you got to start looking at these other groups. And this is one that actually started performing well. And I'll give you that's a daily. Here's a weekly. Here's the fertilizer group. And I was saying, hey, look at the fertilizers, look at the steels, look at some of these ones. And everybody was going, what, are you kidding? These aren't growth stocks. Well, there are times when growth stocks don't work, and things that haven't done well in a while, or commodities and prices start moving higher. And I got a terrific move in the first 3 or 4 months of the year by looking at this and looking at some of the other, the other stocks. Oil and gas stocks started doing well. Steel started doing well. And then technology started coming back again. It rotated back in. See, so here's the beginning of the year. In January, you had just a continuation move of this whole move from the bottom for just another month or so. And then it turned into a real chop for the next 3 or 4, well, that was almost 5 months period of time. And then we got this move. So it was cyclicals, then it was back to growth. And now it's kind of, now it's like every week it's a different group, a different area. And so what I'm constantly doing is I'm just going to look and see what has done well during this year, what has sat out for the last 2 months, and what could be coming on again. And that worked. And that just worked extremely well today, because in the last couple of weeks, I've been starting to look at the steel stocks again, because they had this great move and everybody was talking about them, but then they got out of favor, or the group, and it came down. But really, if you look at it, it only got a couple of days of bad volume. And then they reported them, and look at the earnings now. And you have to be careful when the earnings are extremely good on cyclicals. You're usually towards the top, but really you've only gotten about 4 quarters so far of big earnings. And I think you've got some more quarters to come on these stocks. But anyway, but you just take the groups that were strong, that are out of favor for 4, 5, 6 weeks. You start looking for a turn, and that worked well there. Steel Dynamics, similar situation. And then oil and gas, these had a great move at the beginning of the year. See, I mean, here's since December, here's Callon Petroleum went from, 15, 16, all the way up to 60.
Yeah.
Came down now and corrected much too much that I like, but I still bought this as it was starting to turn, and the price of oil took off, and it had a terrific move. But other ones in the group, like Oasis, you can see all the alerts I had on this one.
Yeah.
This set up again after a terrific move, set up really a cup and a lower handle, and then that has had a move out. Denbury, I think this is a little bit slower, not acting as well, a little bit choppier, but let's see, Oasis. Oh wait, that's I already went on that. But EOG, uh, that's another one. See, had a nice move, came down, and then started turning and has set up a consolidation and is moving out again. And then, I mean, then you've had technology stocks that uh, had oops, wrong one, that have had great moves. I mean, this one really only gave you one chance, and this was only a couple week pullback, but that's been a good mover. So, and then you have some new issues too that have done well. So, but it's constant rotation, and you
Yeah.
just have to try to stay in front of it. And almost and buy when they break down trends, because lots of times they get to highs and then they start stalling and then they pull back, and it's a little bit harder to buy pullbacks that have worked, rather than get in a little bit earlier before the stocks move higher.
And David, when you first bring up a stock chart that you haven't seen before, what does your eye go to first, and how do you kind of move around the screen and analyze both the technicals and fundamentals of a stock you've never heard about before?
Um, well, I usually just let me just, like, I was looking at this one today, Advancic, ASIX. The first thing I do is I look to see, and you can see the different trend lines I've put on here. I look to see, first of all, is the stock in an uptrend?
Hmm.
Is it close to its high? And then I focus in, is it okay? Now, is it extended? This has only gone sideways for a couple of weeks. So I actually like to see longer bases. I mean, this is a better buy situation right here,
Hmm.
where the stock's been in an uptrend, goes back and forth for 5 or 6 weeks, and then it comes through. Um, to me, I like the longer buy points better than these short bases, because I think short bases usually get short moves out of.
Hmm.
And so, but I first focus on, I'm always just looking over here, and within a few seconds I can say if I'm going to spend any more time with this stock. Let me just, I'll bring up randomly. Here's IBM. Okay, gap down, bad relative strength. I don't have to spend more than a fraction of a second on that, saying it's
Yeah.
gone. I don't want to look at that. Let's see, DuPont, 37 relative strength, downtrend, no. So okay, here's a better one. AMD. Okay, AMD, yes, this has been a strong stock. It's been an uptrend. Okay, but now I look at this and I go, okay, well, it should have been bought somewhere down in here
Yeah.
where the majority of the base was. It's up here, it's extended. I think it looks strong. I guess they have earnings in a day. That's another thing I don't want to buy right before earnings. It's extended. I'll put that, I click this button, I put it into my data monitor. And so I'll look at it again. But within seconds, within a fraction of a second, I can tell if I should spend any more time on it. And
Hmm.
then once, let's say I find something, let's see, I look at something that's got a nice longer base on it. Okay, this is about a 5 or 6 week base on it. Nice uptrend. The group is not in a great group, but if they ever pass infrastructure, then this company will do well. I've done well in the past on this stock a few different times, and but then from there I go to, I say that the chart looks good. Now it looks like it's breaking out, but then I go to the earnings down here. All those look good. Then I go to the weekly. Um, and I like to see, are the institutions, well, the institutions actually have dropped in the last couple of quarters, so that's not a good sign. Um, and then what kind of growth rate? 28% growth rate. So I just start going through the CANSLIM characteristics, but it
Yeah.
all starts with looking at the uh, at the uptrend and the consolidation of the stock.
So just to kind of summarize what you're saying, you're looking for a strong uptrend, and then within a base, you're looking for price tightness. Is that kind of what you're looking
Yeah,
for very quickly?
yeah,
Okay.
yeah.
And I think it's really interesting. I've heard you say this a few times. You're looking for a breakout through the majority of the base. Basically, it's
Yeah.
not. It doesn't have to be the high of the base, which is kind of the standard pivot. So could you talk a little bit about that kind of any alternate buy points that you use or consolidation pivots, that type of thing, to get in a little bit earlier than the true breakout?
Yeah, I mean, for something like this, I mean, the high at this point was 101.96. But if I take this and I just draw, I try to make it so simple. And
Hmm.
this, I think, has helped a lot of people. I just say, draw the line, find where the majority of the base was built under. And that's where your buy point is. So many people, they're looking for cups and handles. They're looking for double bottoms, triple bottoms. They're looking for pocket pivots. They're looking for low cheats, high cheats, mid cheats. They're looking for all these things. And I just say, look, don't make it complicated. Just draw the line over the majority of the base. And I'm saying like 90% of the base. And that's probably where your best buy point is. Yes, you can look for lower areas, but I would say that's only for people who are more advanced
Hmm.
to look at these buy points, because you still have overhead supply on these things that are lower down in the base.
Right.
And I just don't know if those work as well as something that a little higher in the base and still has all the different characteristics.
Makes sense. And could you talk to me a little bit about how you incorporate the relative strength line into your analysis? Because I think this is really a hidden gem that a lot of traders don't even use. And I was wondering how you use the relative strength line versus the RS rating, the 12-month RS rating into your process.
Yeah, the RS rating, the number itself is is just a general idea of how the stock is done. But the
Hmm.
problem is, and I don't know if I can think of one right off the top of my head, of a stock that had a great move and now is corrected 50%. It could still have a 99 relative strength. If
I
you can
think
think
Zoom
of,
last year, that was the case with Zoom. Yeah.
yeah,
I don't think its RS rating is that strong anymore, but back when it was correcting 50% off the highs, it still had a 99, I think, just because of the super strong, powerful move.
yeah, let me I'm just thinking of things that oh yeah, a lot of these are now their relative strengths are a lot lower. But
Yeah.
yeah, because what is happening is the relative strength number is calculated over a year period of time. And if I take like this is a year, well, no, that's the beginning of the year. If I take where we are, this is a year period of time on Peloton.
Hmm.
And so 20% uh 20% of the rating is this action. 20% is this action. Another 20% is this action, and the last 40% is this action. So there's more weighting on the last quarter. But if you have this huge move here, then and the stock's off 50%, you still might have a very, very high relative strength number. I like to look at the relative strength line, and that line may be easier to see if you look at the weekly. That line is against the S&P 500, which is a little bit more constant. And so you can see, even as this stock was still staying at highs, the relative strength line was starting to break. So I put a lot more weight in how this stock is acting relative to this line. And you can see even this, a lot of people are going, okay, maybe this is a buy spot on this stock. It looks like it's starting to break out and it's formed a big cup, but look how it's acting on a relative basis. This is where the relative strength line was the last time. It was at 124. Now the stock actually hits 129 and the relative strength line is actually lower,
Right.
saying that this thing's it's just not acting well versus the market. So I put a lot more weight into how this is doing. So you can see some real divergences that are occurring when stocks are making new highs and the relative strength line is not making new highs. And I mean, here's an example. Look how well Amazon was acting on a relative basis back here.
Right.
Stock actually breaks out of a base. Everybody's getting excited. It goes for 3 days. look where the relative strength line is now at this point versus where it was even at lower prices back before. It's not the same stock. It's not as strong as it was before. And so that's where you have to be careful of stocks breaking out. If the relative strength line is nowhere near the high, you have to be very suspect. And so and then you can also use it on the downside when the relative strength line is starting to rally.
Yeah.
And this isn't a good example. When the market's in a downtrend and the relative strength line is starting to rally in a bad market, that's a very good sign.
If you actually look at Amazon back in the 2020 correction, you had a great example of that. The RS line is making new highs before the price within the base.
Yeah, here it is. Here it is back here. Yeah, look at the relative strength line going up. But yeah, now look at the relative strength line.
It's in a decline, yeah.
Yeah. And that's where a lot of people have to get out of their mind a great company versus a great stock. You want a great company and a great stock. And Bill said this. I think a lot of people have said this. The only good companies are the only good stocks are the ones that are going up. Who wants to hold one that's underperforming and going down?
Exactly, exactly. Um, I was curious to know your thoughts on this. What do you think about concentration, being in only a few stocks at a time, and how many stocks are in your typical portfolio now, and how is it different back when you're kind of trading in the U.S. investing championships and kind of building up your capital over the years?
Yeah, now I tend to spread out more. I usually go 10 stocks, but and 10% in each position. But if something is acting well and actually even has had some nice upside, then that could go to a 15 to a 20% position. I'm not as concentrated as much. I don't have to push it as hard, but I still have that voice in the back of my head from O'Neill's, saying you got to take advantage of great stocks um, and if you're not up 100% every year, you're a failure. so, you know, so I've always had that in the back of my mind, and that was the pressure about working there. Is that you had to keep up with him, and he was so good. He was somebody I've never seen anybody do this and do it as well as he has. Is take the whole market and boil it down to one stock and put everything in that one stock fully margined and stay with it the whole time. I mean, I still remember talking to the CFO of the company, and he said, yeah, what Bill would ask him every day is, how much buying power do I have? And just keep on buying and buying and buying, something that, but he was able to take the whole market and identify the real
Yeah,
big leader and be able to put everything in it. I want to sleep at night. I want to make sure my family's taken care of. I don't want to be fully margined. I don't think I've been on margin in like 7 or 8 years, because but the one, and then the thinking about that, it's not like, oh, the guy's a chicken and I don't want to go on margin. If you're dealing with very strong, I call them high octane stocks,
hmm,
it's a lot of canned slim stocks are very high growth. They have more volatility. And so when I'm 80% invested and I've got a number of these stocks, to me, that's the equivalent of being 140% invested, because they have much bigger swings than the general market. And these days, I like to have a mix, have a few very high octane, but then some other ones that are just stronger growth stocks, and some that are a little bit slower. But um, because it, again, I've been there where it's like one day all of a sudden, click, the light goes out on your growth stocks and they start falling so fast you can't get out fast enough, and
yeah,
you start losing 10% in a day, and you go, oh my gosh, and you can't sell fast enough. So anyway, that's and then as you get older, maybe get more conservative, and you don't have to push it. So
gotcha. And I was just wondering if you kind of have a favorite Bill story that you'd like to share with everybody listening. Um, yeah,
a favorite Bill story. um uh
I kind of put you on the spot there.
Yeah, I don't know if I have a. He was very, very focused on really pushing. I mean, and really emphasizing that this is the best way to make money in the market through these growth stocks. And I still remember meetings, Monday morning meetings with the salespeople. Well, when somebody would come up and says, "Hey, well, I've got a manager who is a value manager. And is there a way we can develop a product for him or a screen for him to help him pick stocks?" And and Bill would just chop that guy to pieces. And everybody, no one wanted to look up because we just knew what was coming. And because he would say, "What is that guy doing? You got to convince him he's got to be a growth manager. That's the only way to make money." And so he could be kind of ruthless going after people who didn't really fall into his philosophy. So I don't know. The other thing is, I guess this is just a minor thing, is that around when I first started doing well, and I was able to place orders in the trading room, the institutional trading room,
Hmm.
they would call him the Bullet, and I would be called the BB because I was the younger one, the smaller one. And when that would how they would designate our trades of who it was for. So that was my nickname going way back a long time ago. Yeah.
And also, just curious, what was it like being interviewed for Market Wizards way back when, along with O'Neill?
Um, well, I guess he was interviewed in his office. I was in a cubicle among probably about 20 other cubicles. And I think I haven't read it in a long time, but if you read the description of where I worked, I mean, back in those days, these the terminals where you would get quotes on, they were these bunker Ramo machines, and they were very expensive, and you would actually share it with the person on the other cubicle on the other side of the wall, and there would be a divider cut in, and you would just move this thing back and forth. And that's, we didn't have all these charts and computers, and that's all we had. You had to update your daily graphs by hand. You would put a mark in on your chart. And so yeah, I think Jack Swagger, that he just sat. I had a chair in my cubicle, and that's where he interviewed me. But hey, that was fine as long as I had quotes and I had the charts to look at and all the information. I was happy. You don't have to have a zillion monitors and a giant office. You can do this now anywhere on your iPhone.
Yeah, yeah. And getting back a little bit into how you trade, when you establish a position in a stock and you've kind of got a desired amount of your portfolio you want to invest into that stock, do you go in all at once, or are you kind of waiting for the market to confirm that you're actually right and kind of pyramiding up into the position?
Yeah, I usually like to start with like a 2.5 position. And then even on that day, if it starts confirming, then I might go to a 5% position. And then the next day, if it continues to follow through, then I'll try to quickly go to a 10% position. When I'm buying a stock, I'm feeling that my expectation is that stock should go up immediately when I'm buying, if I've timed that stock correctly.
Yeah,
And so I have the expectations that it's going to start going up. If it doesn't go up, then I'm not going to add to it. If the market doesn't confirm my thinking, then I just won't make it a bigger position. Especially if it starts going down, I'm not going to be adding to a losing position. So then, if it turns around, then I will. But yeah, if I'm so sure on my timing that it should almost be hard to buy too. I should be buying it and it starts taking off, and it's actually hard to buy stock
yeah,
and getting a position. The best stocks are the stocks you're up immediately on. Those will usually be your really big winners. So and it's only add to the really big winners, or only add to the stocks that you already have a profit in. And then where you make the big money is if you do it. I think you get a multi-month and then even a multi-year move where a stock you buy it once and it takes off and it makes and it has a great run. It makes a new base, and then then it breaks out and goes again. Well, you can double your position at that point. You can add more to it, and then
Hmm.
because that's where you get the compounding effect of just adding more money to those winning positions.
Gotcha. And just to start to wrap things up, I think it'd be awesome to walk through a base. I don't know if you've got an idea in mind, a recent stock that you bought maybe, and kind of see how you analyze that base. Look for those little details that tell you that's under accumulation or it's under distribution, and yeah, just kind of see how you read a chart pattern and basically let the stock tell you that it could be a high potential leader.
Well, this is a good example, and this gets back to this is Generac, and
Yeah.
I've actually gone over this a few times. But here's a stock that had a 5-year base, and
Hmm.
here's a stock that I had a need for in actually 3 years, almost 3 years, a little under 3 years. There was a huge fire that came through Malibu, and it burned down thousands of utility lines and poles, utility poles, and we were out of power for 18 days. And I needed a generator. I was actually looking for one even before the fire came, because every time Southern California Edison there would be high winds, they would turn off the power.
Right.
So anyway, I looked into a generator. I actually bought a Generac generator, and I actually bought, well, it was actually, this is where the fire hit, and then I got it installed like right about here, and then it's set up just perfectly. But I love the long base,
Yeah.
and you can see that the stock broke out, and it broke out on a lot of volume. And you can see that had a great move up. I mean, it doubled in price. It went from 60 to 120. Then we got into COVID and the lockdown, and then it set up another base. And then so here was a whole new buy point.
Hmm.
And and you can see it's actually had a few bases along the way. Here's another one, and maybe I can go into the daily and show you that. Yeah, this is more, here it is breaking that downtrend, and well, I'm not sure why it had this. There wasn't any earnings here. It might have been a secondary. It had one huge day of volume, and it did have some distribution here. But look how this stock, how it started changing right around at this point, where look at the color of the blue volume, how the volume changed, and you got multiple days in a row. And I always love to see that. The bigger the volume, the better.
Hmm.
And it had actually had 3 days down. I mean, if you take from really from almost this point to this point, this stock looks like it traded, I'm just guessing, 22 days up and maybe 4 or 5 days down.
Right.
And just showing you that just a tremendous amount of buying, especially when you get it above average daily volume. The other thing I like to see when a base is forming is sometimes, I call this an undercut. Some people call it shakeout. It's the same term. And what this is that it didn't undercut over here. It undercut this price.
Hmm.
And so what it does, it scares all these people who bought the stock during this section in here. So you
Hmm.
get out the weak holders. And what you want to see is the stock turn very, very quickly. And we'll see that, yes, now the volume started picking up, and it started coming up and out of there. So then, I mean, you could have gotten an early start, but here is just make it simple. Let's draw a line over a majority of the downtrend, and that gets you in, right? You would buy it on this breakout, pulls back, and then you can add to it, and then you get a terrific run out of that stock. Now it's chopping back and forth, but it's still in an uptrend. Relative strength line is still confirming, and along the way too, all the new highs have been confirmed by the relative strength line. So now they're about to report in another 8 days. But from what I've heard and read is that you put in an order for their generator and you're waiting 6 months to get delivery. So there's a huge demand out there. I mean, every time there's a storm, I mean, even the electrical grid is not very good.
Yeah.
And I mean, all the different problems we've had over the last year, from freezing in Texas to fires in California, it's almost like you almost need one of these now,
Yeah.
because you can't depend on the utility company.
Right. And all those days up in a row are basically with very few down days. That's kind of similar to your ants indicator, right? Um,
Yes.
yeah.
Yeah.
Could you talk about
That's
a little bit of what that is? Yeah.
Yeah, that's something I came up with back when I was running the mutual fund for William O'Neill and Company, the New USA Growth Fund, because what would happen is that we would stick to stopping our buy at 10% out of the base, and I would see that the buying would just continue on afterwards, and those turned out to be some of the biggest stocks where we
Right.
would finish their buying. There were still other institutions that were out there buying it. So I asked the question, what's the difference between a stock that's going to make just a 20% move and be done with it, or a stock that's going to have a multi-year move or a multi-month move and have huge performance? And I found that it was usually the buying at the beginning of the move. And you can actually see it's occurred a few different times. I mean,
Yeah.
here it occurred over in here, and then you can see it occurring over here. And so what it tells you is that there are institutions out there that they do a tremendous amount of research, that they found that, hey, this is a company that could have a great growth for a while, and they have 3 million shares to buy, and they can't get it done. Especially, let's say, I mean, today the stock trades 600,000. So even if they're buying 3 or 4 million shares, it's going to take them a number of days, if not weeks, to complete.
Yeah.
If you have more than one institution doing the same thing, then this can go on for weeks. And that's what I found. This is just showing you huge institutional money getting aboard a stock and taking a long-term position in it.
And that's what creates the trends that we can ride as
Right.
retail investors. Yeah.
Yeah, and the characteristics are, this is what I kind of boiled it down to, is you want a stock that is up 12 out of 15 days. You want a stock that has about a 25% move during those 15 days, and you also want the volume up 25% during those 15 days. That's just the mark of a number of institutions taking a big position in a company. The one other thing you have to be careful of, though, is if the stock has been moving for a long time and you get those exact same characteristics, like might have actually happened here,
Yeah.
is that it's actually sometimes it was just a great indicator, because we found it was showing up at the beginning of the move and it was showing up at the end of the move when the stock was getting very extended. And so it was the first time I'd ever seen an indicator that could work both ways.
Right.
And the climactic move is when everybody recognizes it and everybody can't take it anymore, and they've all got to buy it. And that's usually the climactic move, and the stock's over. In this case, it was over for about 3 or 4 months, but in other cases, that's the end of the move for years. So it actually works. It's worked very, very well.
And going along those lines, net, if you could bring up net and Cloudflare, I'd be curious to hear your take on this one, because this is showing a little bit of a change in slope and an accelerated move on volume. So yeah, what are your thoughts on this chart?
Yeah, well, this is to me, it's getting well, I mean, it's extremely extended, and you have to always go back and look and see where the stock has been.
Hmm.
And I mean, you look at this, and even before, well, I guess, even before it went through somewhat of a correction for the first 6 months of this year, the stock has already gone from, it went from 20 to 80. Okay, built a new base, and now it's gone from 80 to 189. So it's gone a long way, and now it's getting, I've always said, okay, look at the angle of assault, the angle of the move, and it's going like that, and now it's going like this.
Mm-hmm.
And to me, that's probably telling you that it's probably getting closer to the end of the move, and not the beginning of the move, because of how far it's already gone.
Yeah.
If this was happening,
At
back
the beginning.
here,
Yeah.
and it almost looks like it happened back here.
Yeah.
I mean, look at this period from, from this spot to, I don't know, this spot. You really had 1 day down, 2 days down, and it looks like it looks like about 12 or 13 days up. So, um, so again, but if you get that, and you had a move like this, it's telling me the odds are in your favor that it's probably getting close to the end of the move, and you got to be careful. If you own it, then I would probably be looking for a reversal, and just piecing a little bit out every day.
Gotcha. And not necessarily with this stock, but a stock that you own that goes through a base and then kind of fails a breakout or breaks key moving averages. What would cause you to basically sell a position that you have, if that makes sense?
Well, if it comes back, if it's a stock that I had just bought, if it breaks out and then pulls back, then it would be the stock coming back down
Yeah.
into the base and also coming back. I mean, like this one, I know I owned this during this period, and then I think I sold it on this break, and I never
Hmm.
bought it back. I mean, this is just crazy. It's very, very rarely do you see a stock that breaks down that quickly and then comes back
Yeah.
so much.
Yeah.
But that's, to me, again, it's sort of the times we are in with so much liquidity. Some of these things are doing things that are just very, very unexpected.
But basically, if you do have a position, it's trending nicely above the moving averages and then starts breaking the 50-day, 10-week on volume. Is that kind of your indication that the trend might be changing? Yeah.
Yeah, and you're always looking for change. You're looking for, what's happening in the supply demand ratios of the stock. And this, right now, yes, this is very, very strong. But just even, I guess, last week it got some huge volume on the downside, which is almost, I think it's about as big as all the volume on the upside. But today, with the market being fairly strong, this one kept on going out. But so you're looking for a change in characteristic, and right now, yes, that's a change because it's now going up almost vertically.
Yeah.
And I've always said that's like the air shows that you'd see. You go to the airport, and the planes flying along the runway, and then it starts going up a little bit faster, and then a little bit faster, and then it starts doing this, and at some point it's going to start stalling.
Right.
And it's, if you can it's great to have one of those, but you still have to treat it the right way, and sell some of it out when it's going through that, because eventually it's going to stop.
Makes sense. And you had UPSC on here earlier, but I'd love to hear your thoughts maybe on some other growth leaders like AFRM, which doesn't have the earnings, but the price action is super strong. And just kind of go through the true market leaders in the growth space that you think, basically what you think the true market leaders are at this moment.
Well, I mean, Upstart, look, that's 150 to 400
Yeah.
in 3 months or 2 months or so. Um, I guess if if your time frame is shorter, you can look for pullbacks to a little prior base or back to very close to the 21-day moving average. Um, but you always keep on looking at that volume, and we haven't gotten any bad volume on the downside. But today it was up, but the volume wasn't as heavy as some of the down days. So
Right.
you got to be careful on buying pullbacks. Um, what's is it AFRM?
Affirm. Yeah.
Yeah,
Yeah.
Affirm. You can see extended, and it looks like today it stalled.
Hmm.
But it's just, when I see a stock that goes from 70 to 160, I just, I don't own it. I wish I did, but um, I just wait until a whole new base is built.
Right.
I don't spend a whole lot of time. And if I owned it, so far it really doesn't look like it's done anything wrong. So you just stay with it. But to buy it, uh, right here, you take too much risk.
Gotcha. Um, yeah, and maybe one more COIN, Coinbase, which is a recent IPO. The entire kind of crypto theme is also kind of working at this moment, which I don't know if that's something you're interested in or yeah, looking at.
Yeah, well, this is this is again straight up from
Yeah,
250, 325. I've been in, and this is only because of instructions from my son, Sean.
yeah,
Um, I mean, this guy, he picked it perfectly back here. We were getting in down here, and we rode this thing up into that area. And then when it started turning again back in here, he said, let's get back on this thing. And we've had a nice little run, not as big of a position as before. Um, but that's the only, he's the one who has told me we should be buying this stock. Um, so again, I just think this is where maybe I'm getting old, but I just think there's just so much speculation going on that sooner or later, there's going to be a time where it's going to, and I only felt this once before. This was during the 2000 period where there were stocks, internet stocks that would correct 50%,
yeah.
turn around and double and triple from there. And my rule was if a stock dropped more than 50%, I wouldn't even look at it anymore because it'd have to double to get back to the old highs. But you're seeing things that are happening. I mean, the same thing in Bitcoin. It's already doubled from the low.
Hmm.
And this goes on, it can go on for a while, but at some point, um, and I heard this so many times in 2000, 2001, where people said, I made so much money in the internet stocks. And then I didn't sell and I lost it all back. You have to have a sell discipline. If you're operating in the market and you're just buying based on what everybody's talking about, or just a chart that's going straight up, you have to have a sell discipline. You have to have, how do you get out? And it's always, how do you get out in? How do you get out? You have to have both sides, because some of these things are going to correct, and they're going to correct dramatically. And if you don't have sell rules, you're going to lose a lot of money. And this is a period which I've only seen a few different times, and they don't last that long, but you try to take as much advantage as you can while it's happening.
Absolutely. Are there any other concepts you wanted to cover when it comes to charting, or I always like to wrap it up with one last question. But if there's something else you'd like to mention, or you think it's important for people to realize about how to interpret charts, go for it.
I think the way you interpret charts is you just study the great winners. I look at them week by week, day by day. I look at their moves, I look at their volume, I look at their price patterns, and I get the way you're going to do better is you're going to get what a move looks like. If you can get that ingrained in your head, I mean, even on, let me go back. You can just take this one stock, Generac, and you study it on the breakout and on the move and on the continued move, and you look at the correction,
Yeah.
and you look at all the ways that the stock has moved during this period. You're going to develop you're going to start realizing what the characteristics look like of a great performing stock. And you got to get that memorized in your mind, so when you see it show up again, you'll be able to act upon it. That's the best way to do that. You can read all the books you can, and I have a little bit problem with books that have been written since O'Neill's book, because a lot of the books that have come out, some of them they add a little bit to our knowledge base, but so much of the literature out there and the stuff on the internet is just regurgitating the same things that Bill put down 20 years, 30 years ago. And they change the concepts, they change, or they don't change the concepts, they just change the names. and they're just putting new names on things that have already existed and then have already been pointed out. But I guess that sells book. But I just have a problem with people keep on coming, repeating the same things that are out there. Again, there's nothing new under the sun. A great winner is going to act the same way it did decades ago as it is now.
Absolutely. And even going back to Jesse a little bit more with the pivotal points, the same
Right.
patterns repeat over and over again.
Yeah.
100%.
Yeah.
Um,
Yeah.
well, David, thank you so much for your time. I always like to end it with one last question. What kind of general advice would you have for a trader who's just getting started or maybe has been doing this for 2, 3 years, but is struggling to stick with a system, find something that works and become consistently profitable?
Yeah. First, go slower. I mean, don't use all your money. Use a portion of your money until you can start making progress in the market. That would be one thing. The second thing is, study the great winners, and get those characteristics, down in your mind of what to look for, and just study those. Spend hours. I've spent hundreds and hundreds of hours studying these great winning stocks, and then read Bill's book and read that over again. There are not that many classics that you should be reading. um, and then just have a very humble attitude. Be willing to examine yourself, your mistakes, and see where you're going wrong and correct those mistakes, because that's where you're going to learn as much as you will from reading every investment book out there. So.
And outside of a Bill's book, How to Make Money in Stocks, of course, which everybody should read, what are a few titles that you think are definitely worth it for new traders to pick up and take a look at?
I think Darvis's book, How I Made $2 Million in the Stock Market, that's a
Yeah.
classic. You can read that in a night. That's a great book. Um, I have Mark Minervini. He's got a couple books out. I think those are good. Um, and he kind of expands on some things, and I think some of his best parts are on risk management,
Yeah.
because Bill doesn't talk too much about risk management. Um, other than that, as I said, this Bible behind me, it's wisdom for investing, it's wisdom for life, and to me it's truth. And just keep everything in perspective. This market's going to come and go. There'll be another markets. There'll be another great winners. Don't get so upset if you're underperforming or you missed the great big winner this year. There'll be another one coming this year, because that's what's so good about this country. There are always successful companies that are being formed, and those will be on the market in a couple of years. And sooner or later, you're going to get a big winning stock, and you're going to go, boy, this is terrific. So just stay optimistic, stay humble, and work hard is I think the key.
Perfect. Well, David, thanks again so much for your time. It was really a pleasure for me to have this chance to sit down with you. I told you before we started recording how much you kind of taught me through videos and books from afar. So this has really been awesome. To everybody watching, I hope you enjoyed as well. Remember, leave a like down below and subscribe to the Trailline channel if you haven't already. And we'll see you guys in future videos. Thanks.
Yeah, bye-bye.